Hey folks, what an incredible ride it has been, but it seems like the GameStop tale is finally coming to an end. This video is all about GameStop, the stock that is skyrocketing, possibly because of memes. So make sure to watch it till the end. GameStop. Whenever I hear the name of that company, it makes me feel a roller coaster of emotions. The first one that comes to mind is nostalgia. Come on, we all have probably grown up with GameStop, haven't we? If you dig deep into your vivid memories, I guess you all might have found yourself waiting for the release of Halo 2. And not to forget how everyone used to laugh, share snacks, and especially cheer when the doors opened. I am pretty sure that every one of us in GameStop might have discovered games they hadn't heard of before, since we wouldn't have found them in Best Buy or Walmart. Okay, now just sit back and relax as we uncover this whole GameStop incident. Before we jump into the video, check out if you haven't subscribed to the channel yet. If so, please make sure to subscribe to it and hit the bell icon to get updated with amazing stuff like this. For those who are unaware of GameStop, it is the world's largest retail gaming destination for Xbox One X, PlayStation 4, and Nintendo Switch games, systems, consoles, and accessories. GameStop went public in 2002. It was once a brick-and-mortar video game retail with over 5,000 stores. But in recent years, most gamers now get their titles via digital downloads and not physical CDs. Am I right? It has not been doing well over the past several years. Their revenues have been falling. It is said that it's going to lose over $100 million next year. This was once a utopian paradise for gamers, which has now become a desolate wasteland for abhorrent business practices. GameStop has now become a battleground between Wall Street hedge fund managers and retail traders. It pretty much created countless legal battles. Let me tell you, back in August of 2019, a businessman named Ryan Cohen took a large portion in the company, thinking to pivot the company online. He's an activist investor and entrepreneur who has co-founded online pet store, Chewy. He spent $76 million to buy 9 million shares of GameStop. Can you believe that? He is now part of the board since he wrote a letter to the board wanting them to shift their focus away from the brick-and-mortar retail to build an e-commerce platform. And then, Reddit, as you know, is a news aggregation web content rating and discussion website. One of the subreddits is WallStreetBets with 2 million members. This is where GameStop stock was furiously discussed. The price of the stock has gone up over 80,000% since March 2020. It has spiked from $2.57 to $483 per share. Needless to say, it has been making headlines. This is something that we have never seen before, or at least not unfold on this level. So there's no wonder that it's made them quite a target of short sellers. What is short selling? Let me put it this way. You can make money when the stock market goes up and even when the stock market goes down. So that's pretty much what short selling is. When you short, you are borrowing shares from a broker to be able to short it and then return the share, gaining a profit. Here you make money when the stock goes down, and here, in this case, it eventually leads into short squeezes. Now, who are short sellers? Short sellers are people who bet against stocks. The biggest short sellers are hedge funds, institutional investors. Retail investors don't have that much capacity to short sell. Short sellers come in and they borrow the stock and then they sell it into the market, hoping that it's going to drop because then if it drops, they can buy it back at a lower price and pocket the difference between what they borrowed it for and what they sold it for. When there is a lot of short demand for a stock, then a short squeeze might happen. Coming to GameStop, there was 138% of the stock being shorted. What does this mean? It simply means that over 138% available shares had been borrowed. This is completely insane, I know. GameStop has captivated Wall Street's attention. But if you see, this whole obsession isn't just with the rally, it's who's making the money out of it. Reddit folks are going up against well-funded, fancy, professional Wall Street traders. If you observe, GameStop shares have soared over 6,500% so far this year. So by now, you might have found out that there is nothing significant about the GameStop business that is driving this rally. Even experts say that there is no fundamental reason for this stock's success. GameStop lost $795 million in 2019, and it has again lost $100 million again in 2020. That's a lot. What happened with Robinhood and Reddit? Robinhood is a commission-free app through which the practice of buying and selling stocks every day to profit off the daily stock market moves has shot through the roof. Now, in 2021, all these 10 million newly minted amateur stock traders can discuss with each other on social media, like Reddit, and especially one subreddit in particular, WallStreetBets. It is popular with day traders. They pick a stock, they run with it, they tell each other to hold, don't buy, and when to buy. All in all, GameStop is the latest example of this. Here's what has happened. Certain hedge funds and professional traders have done their diligence and believe that the company's business is suffering and therefore have placed sizable bets that the shares will fall. But the tables turned, didn't they? I'll tell you how. A ragtag team of average Joe traders has decided on subreddit to buy the stock, which eventually sent the stock price higher. Phew. Can you believe that? To add on, they've even got some high-profile billionaires cheering them on. Yeah, Elon Musk's tweet added fire to this. This is where a short squeeze happened, when a stock doesn't go down and they'll end up buying it back, which causes them a loss. Melvin Capital is now out of the stock. They've taken a rather huge loss. So retail folks buying GameStop stock sent the price higher. Now you can observe that there are enough buyers to squeeze some of the short sellers. Now, in order to cover up their losses, the shorts have to buy the stocks. Now, if you see, GameStop has been the highest short-selling company this year. Last year, it was on Elon Musk of Tesla. For a fact, Elon Musk hates short sellers, and this statement is backed by his tweets. According to CNN, Tesla short sellers lost $40 billion in 2020. 3 things that can be learned from this are: number 1, small investor community is now organized and mobilized to act instantaneously. Number 2, you can see an environment where flow matters more than fundamentals. And number 3, when you see insanity in the stock markets, don't short it.